Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And this is another segment of our top 3 option plays this week where we're just going to go over a few different trades, stock fundamentals, and different strategies that you can do to make it through. Okay, but first, if this is your first time watching this video, please make sure you click that thumbs up button. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. Okay, so a quick recap of last week's plays. So we were pretty bullish on Love, that Southwest Airlines, starting at 52.23 after the recent international travel ban being lifted. And even with positive earnings, the stock continued in its pandemic downtrend all the way to 48.42 on Friday. Next, we were bearish on Baba, that's Alibaba, at 158.73 with the strong yearly downtrend, overseas bans, and supply chain shortfalls. But with the popularity and success of Singles Day last week, the stock moved up to 166 close on Friday. I'm still overall bearish on this stock with the overall trend. That may just have not been the best entry position for that. And then last was QCOM, and this was our star play from last week. So we were bullish on Qualcomm around 163.03 after their strong earnings release, and the stock moved up to 169.52. It fell in the middle of the week down to 159, but they actually closed last week at 164.94 on Friday. So that was a pretty good move for this stock. And let me just say this, before we get into this week's plays, these are not moves to just jump into on market open Monday. A lot of these are popular stocks and they're moving. And so we're putting them in watch list to see if they start to reach our entry points. And that's why I like to set those. So if it doesn't move to our entry position, then do not take the trade. And if you do enter it and it moves against you, cut your losses quickly. All right, so the first stock I want to look into is NFLX, and that's Netflix, trading at 682.61. Now, this is going to be more of a momentum play, and that's basically a trading strategy where we're looking to buy into stocks that have been showing upwards price trends. And the main idea with momentum investing is that once we're able to see a clear trend, then it's more than likely going to continue. And, you know, to all of my science people out there, you remember Newton's law of motion. An object in motion tends to stay in motion. So just looking at the 180-day chart, we can see that Netflix has been trading above our 50-day moving average for a majority of the year. Then we've also had some pretty strong earning wins. And the most recent was the past October expected earnings of $2.50, but they announced $3.19 per share on sales of $7.48 billion in the third quarter alone. And this is about an 83% increase from last year's earnings around this time. Now, one thing that you're going to see with this stock, that we've been making consistently higher highs and higher lows, kind of starting back in the middle of August. And then after the last earnings, we reached our 52-week high of $692. So right now we're very close to a resistance zone. You'll kind of see right here. We're very close to a resistance zone around 690 and 692 with the RSI around 68 in an uptrending stock. You know, that's really not considered very overbought. When you're in a strong uptrend and you're looking at the RSI indicator, overbought is going to be around 70 to 80. So it still has some room to grow where it is right now. And then another thing that I like to see is, even though our MACD did kind of start to trade below the center line, it's starting to move its way back up pretty strong. So, and you'll also see with the ADX indicator that the DMI plus is trading above the DMI minus right now, and the trend strength is pretty decent. And then you'll see we did kind of just break above our 50-day moving average on Friday. We would want to see how Netflix reacts to reaching that point again. Is it going to bounce off of this resistance and continue to move down, or will the volume be high enough for it to actually break through that resistance and reach higher highs? That's pretty much the basis around this position. So moving a little bit closer closer. For a bullish position, I would have my entry point around 692 to 695, because when the stock reaches that point, it's definitely have broken through that past ceiling point, and then that could be a sign of continued growth. And then I would have my target price around 720, just going off the strength of the trend. Now, looking at our options, our implied volatility is looking pretty well. It's around 30%. These option premiums are really high, so I would kind of want to do a position that's going to cut some of the entry costs by doing a long call debit spread. Okay, so this is going to be a long call debit spread, December 10th expiration. This is still going to be a call. It's still going to be bullish. It's just, you know, these options are very expensive. So what we're going to do is we're going to buy this 680. We can sell the 685. And so this is a call debit spread, and this is going to cost $252. But this is going to be a limit price, and the bid and the ask is a little bit high. So the most that you might get into it, this is going to be upwards of 300. So that's just kind of something to be on the lookout, but it's still going to be a lot cheaper than paying $2,000 for the option. And with this one, you're going to be profitable as long as Netflix stays above $682.53. All right, and the next play is going to be AMD. That's Advanced Micro Devices, and right now it's trading at 147.89. All right, so we talked about this stock a little bit on the last midweek recap. AMD has been doing pretty well. You'll see from the stock chart that it's in a strong uptrend since they announced positive earnings on October 26th. Now, this is also going to be a momentum trading strategy just based on the strong uptrend of the stock. And you know, we have been talking a lot about stocks in the semiconductor industry. QCOM did pretty well on last week. Would AMD still be considered a buy right now? That's a good question. AMD competes with companies like Intel in making CPUs for, you know, personal computers and servers and things like that. And then they're also competing with stocks like Nvidia with making graphic processors for game systems and computers. But because of how innovative the company is, they're putting themselves in higher ranks than a lot of their competitors. So just as an example, AMD jumped ahead of Intel when it started to produce 5 and 7 size nanometer chips. And then at the same time, Intel was still struggling to make 10 nanometer chips. Just last year in July 2020, Intel said that they were going to have a delay in production. Intel isn't even going to be shipping out 7 nanometer chips by 2022. By the time they get that out, AMD is probably going to be making 3 nanometer chips. So AMD is definitely in line to dominate the market, and it still made a lot of gains this year, even with supply chain constrictions and us being under a chip shortage right now. Like we said, this is going to be a momentum play based on the recent strong move upward, you know, and with the stock kind of cooling off from reaching that 52-week high at 155.65, you know, we could start to see it move back to that point and, you know, possibly above. Now, looking down here at the MACD indicator, it's still trading above that center line after that drop, and it is kind of looking like it could have a crossover and continue moving upwards. Just kind of looking at the histogram. Now, one thing to notice is how neutral the ADX indicator is. Now, moving to the 5-minute chart for a bullish position, I would set my entry price around 149 to 150. And then I would have my target price around 155 and up, that recent high, because, you know, when we start to see the price continue to move into or above a previous resistance, then that could be a sign that the stock is going to continue increasing on that strong momentum. Now, looking into the options, the implied volatility, you know, it's pretty neutral around 50. And we have, you know, one thing that's good about this is we have very high open interest in volume. So that kind of shows how many investors are interested in these option plays. And with the cost, you know, the cost is a little bit up there. If you were trying to do it at the money, it's about $750. So I would probably want to do another debit spread on this to kind of cut down on some of that premium for AMD. And so I'm still gonna pick the December 10th expiration date, and this is going to be a debit spread. So I'm gonna buy the 145 call, and I'm going to sell the 146. And so you see we have a call debit spread. Now this is going to be $52. And so with this, we're going to be profitable as long as the stock is above 145. So, all right. And the last stock is MARA. This is Marathon Digital Holdings. And right now it's trading at $75.92. This is a company that provides computer power to mine crypto like Bitcoin. Actually, it gets paid in Bitcoin. So right now they actually have 7,453 Bitcoin. And that's worth around $457 million. And their stock price actually moves a lot when Bitcoin does. And with Bitcoin reaching new all-time highs, then this could be a good outlook for Marathon at the same time. So going back to the stock charts, you're going to see right now we're really close to our 52-week high at 83.45. Now we did have a slight dip down to 63, but we are still trading above the 50-day moving average. It is kind of, using that as support. That's a good sign for, continued upward movement. Similar to the other stock, looking down here at the MACD, it's also showing good signs of a, possible crossover. And so for this particular stock, I would have an entry price around 77. And then my target price, I would have it a little bit higher than our recent high at 85, just based on how the stock is moving. Now, looking into Mara's options, all right, you'll see that our implied volatility is, is very high. It's well above 150. So for a position like this, even though I'm bullish on it, I'm gonna move more into doing a credit receiving play just because of the higher value that it has right now. So I would wanna do a put credit spread. And for this one, I'm gonna do December 10th. Now, just know with this one, you actually don't have to stay into this position. Even though we are receiving the maximum credit when we hold it to expiration with these, you can actually exit early and you can take profits around 30 or 50%. So with this credit spread. Okay, now this one, I'm actually going to sell the 63 and I'm going to buy the 61. All right, so this is our put credit spread. And with this one, we're going to get a credit of $80 and the most that we can lose is 120. So it's not too bad, but as long as the stock stays above 62, we'll be good. All right, and make sure that you guys check out this video that we just posted about iron condors. This is really going to be good for neutral stocks. With these plays, you're still going to make profit whether the stock is going up, down, or to the side. So definitely make sure you check out this video on iron condors. All right, check that out.